Good evening, guys. Kenneth George's Capital Nightly Strategy Podcast for February 15th, 2024. Starting with hybrid swing portfolio. This is Alcoa, 30-minute charts. Yesterday's SFE entry, we closed here, gapped up to here, finished strong. But as this started rolling over and the RL30 started to peak, and we were close to resistance, I just wanted to make bank on 3R and call it a day. AI initiated a 1-2-3 entry midday on resilience in AI, and this looks like a great big cup and handle. Get ready to start. So I like the COD 2 crossing the VWAP standard risk. We're holding 2R, and I'm going to keep that open. Caterpillar COD 2 reentry. We'll hold that one overnight. 2R. Cliff. Basically the same trade. Gap down all the way down to here, then crossed the Bollinger Band mean, resumed the upward movement, and going to hold that one. That's 3R in hand. CVS, big move early in the morning. So you had the gap here, ran all the way up, peaked, crossed below the VWAP here, took the entry here, standard risk, sold off to the skin of the dragon. It's about 0.5. And I think that was perfectly played. Really proud of that one. VIA was the COD 2 continuation. I should have got a second position in on this one, but we're holding 4R into the close. Disney, Scratch, Devon Energy, COD 2 and Peace are flip, holding 4R going into the close, and it's energy, so I made bank on that one. It's so choppy routinely that gifted 4R, and it was well above the VWAP. So I wouldn't be surprised if there's a continuation. There's a lot of room for that still go up, but this felt like a natural place for resistance to hit. And the last time it was here, the last two times it fell sharply. So if I can get 4R on that move, why not just make back? Now, if it breaks above this, if it breaks above 43.50, well, sure, up it can go, but let's accept a gift of 4R. That's my reasoning. Emerging markets. This was a COTA 2 continuation. Failed immediately for -1. It reversed. I re-entered and got one back, so this was a net scratch. Ethereum and Merging Dragon for 1R. More to follow. That's just as nice as it can be. I mean, to tell you the truth, we look at Ethereum on a 3-day chart. That's a beauty. That's not looking weak at all. That's the 9-day chart. Ethereum is really strong. You'll recall we were back into this thing around 7. So that's been a 300% gain in the long-term portfolio. And this has been a really good tactical trader. Now, I want you to just notice this little region in here has been extremely short-term volatile compared to the quiet grinding up. But that's the last 9 days. It's gone from 20 to 24. That's a 20% gain, and it's well above this level here. I like this. 50s or 30s in sight. I like. This is Mexico. Try to gap and go. I was up almost 2R and then was lucky to scratch out of the VWAP. So I was sloppy with that one. Brazil, Tapanara on a Kata 2. No trade in China. Intel was a gap and go that failed. So it gapped here, closed here, gapped to there, ran up, and then quickly started failing back through the VWAP, back below the RL10. So just speculated short. And I covered for 2R near the end of the day. That's the reversion to the mean trade. All you guys that were in the foundation's Q&A, foundation students there was about a 70-minute lecture on how we trade reversion to the mean with statistics in a variety of settings in a variety of time frames. It's a master class on reversion to the mean, and that's a perfect example of one. After an exaggerated run up that peaks at an extreme condition above the previous resistance and then can't hold it and it flashes below the VWAP, that's a short signal. This is the reversion to the mean that you are aiming for. But since it took this long to get there, that mean is improving somewhat. So that's always a sliding scale. And so we were happy to collect 1.5 on that one. That's a mirror image of this one. This peaks, hits the dragon skin. Could have been, should have been short from there on a return to the Bollinger Band main. And then this distance is that distance. So it's very symmetrical. And that's the reversion to the mean trade. And that's the excursion from the mean. And that's the reversion to the mean. So when you're looking at that dashed red line in the middle, that's the mean that we're talking about. That's the Bollinger Band mean. That's the SMA 30. That's the middle of the river. These are the excursions from that. That's the reversion to that. Excursion, reversion. Standard work. IP initiated a intraday Kata 2. Holding it. Same for U.S. real estate, holding 2R. Coca-Cola, no trade. Regional banks, Kata 2 for 2R and exit. McDonald's. So yesterday's little recovery move, that's the SSC. It closed well yesterday. It gapped up, added a second position, and it did nothing but scream north. It's above this resistance. So this is all a sign of strength. Now it has to get above the dragon and above the RL10, but that looks promising. Everybody has to own McDonald's. NVIDIA, or no, I'm sorry, that's Meta, no trade. I got extra trade with it. Merck, no trade. Microsoft, no trade. Marijuana, cross the Bollinger Band mean on the gap up and go. So long with the standard risk, it ran up and held. And then as it started to decay, took the exit for about 2R. Gave it as much room as I could. Nike, we closed yesterday's out of 2 for about 4. NVIDIA, trade. Clean energy, no trade. Rivian, no trade. Missed a move in the morning. The S&P was very strong and closed well. Treasuries recovered somewhat. Tesla, yesterday's speculative SSC, which closed well. Yap up and go. Second position closed very well at the top of the range. So we're holding 1, 2, 3, 4, 5, 6, 7 on this one. 1, 2, 3, 4 on that one. It's an 11-hour trade in Tesla, all the way back up to 200 from 180. This starts off as a reversion to the mean trade. There's the mean. This keeps going. So now we got to be thinking about how to preserve this move. If it starts failing, do we take it at the skin of the dragon, spine of the dragon, belly of the dragon, VWAP, and PSAR, the gap, the Bollinger Band mean, etc. So each of those becomes a price preservation level, a capital preservation level. We got to come up with a strategy for that. The lowest I can afford to go is the VWAP. As long as it's north of that VWAP, it's still in the money. But I can't allow it to go lower than that. It's too much stop would be at 196. That way, the second position is still in the money, and the first position is gold. Walmart caught a 2, holding 2R. No trade in U.S. steel. Let's look at that. So this is a symbol that 3-minute sniper trade of the day. Yesterday's close, the gap up, buy it, standard risk. Standard exit at the PSAR for 4R, 3R, sorry. Out of 2 reentry. Standard exit at the PSAR for 2.5R. Out of 2 reentry. PSAR exit for 1.5R. Out of 2 reentry for scratch. So that is 3, 2.5, and 1.5. That's 4, 7R. And the symbol is Tesla. Standard work. Standard work in Tesla. All attitudes. And the exits at the piece are designed to protect against a move back to the Bollinger Band mean and then back to the VWAP. So we talked about the relationship between the Bollinger Band mean, which is this red line here. That's the 30-period simple moving average. And the relationship between that and the VWAP, which is not as adaptive. Yeah, Joe asks, enter on the first or second bar of each day because of the gap up. Well, it had closed well, and this was a gap up, and it moved a risk box off the low. So, and it was at an extreme sell-off lately, and it had just moved into the star. So that's why I get in. You just find the open, moves a risk box off the low, hold my nose and just get in, and then price happened to do that, so I just manage it. And then everything else is normal. Not just because it's a gap up, because of previous price action too. Right, traders. Let's start with Luke. So Luke has been doing. He's put together a course on how he's trading with the large indexes. This is on the FTSE UK 100. Um, he has an adjustment to the PSAR 0.08. So that's the PSAR there. Second entries are easier to identify, seeing the R10 wiggles. It gets 6 execution R on this one. It goes to a peak, crosses the dragon, PSAR flip short, second position short, and then the exit probably here, re-entry here, second position recovery, 6 execution R, trading a very large index. More to follow. Rad fractional loss today, had some trouble with the afternoon grind here. That's pretty close to be taking a 0.9 R loss. If a move of that much is 0.9, then I think you're way too close. Your stop should be down by the peak start. That's where the 1.0 should be. So I think it's causing you to get chased out of positions. Hamad had some changes. We're not going to dwell on those. He had some challenges with his target selection, and so we're going to respect his efforts in there. Jonathan, I like this. I really like this one. This is a 1, 2, 3 entry. So here's the open. There's 1, 2. Now the bar opens here, goes this high, then collapses below the low of the second bar. So he gets the 1, 2, 3 entry here. Bottoms out, takes it at the skin of the dragon for 0.67, just like downtown. It rolls down. He doesn't chase. He lets it peak. This is where we could consider, by the way, that next entry, because the R10 is reversed, and now the skin of the dragon, which would have acted as if you'd been short here, this is the price where you got to exit, which now makes this thing the earliest reasonable entry. He gets this one on the PSAR flip. We've been studying this one. He gets a fractional gain, re-entry for fractional gain. All good, and he nets 1.27, playing cards pretty close to the vest here. That's good stuff. And his timing of entries is pretty well suited towards the MACD as well. So I really like that entry because the PSAR happened, you're crossing the VWAP, you are thinking it can get to the previous peak. So that's still a really decent move. George gets a nice 2-day continuation trade. Perfect. Except for falling asleep on his reentry. No worries. Good exit to preserve capital. Good scratch. This is where we might have thought about a reversal to the short side after PSAR flips, leaves the dragon. But with only 4 bars left, I don't blame you. Continuation re-entry was possible. You can't say it doesn't seem to be going anywhere because you're buying the potential for going somewhere. And with the strength in the S&P and the Dow, IP is a low risk entry right there for the re-entry. And we already saw it. Looks right there. So pushing all the way back to the all-time high again. This is just solid as can be, and this is the 150-day look back. Here's our 30. Here's the 10. This is 5, and then this is 1. And this is where that last compound critical state was that started this whole mess. We talked about that if it failed, it was going to be miserable, but if it recovered, it just might do something as it climbed and tested each of these resistance levels and succeeded each time and really unleashed the hounds right there with that second leg up. And now we're at all-time highs, just like that. 1, 2, 3 today for the daily. And that's what the intraday trade looked like, really positive all the way through. In the report, bullish normal, back to strongly overbought. Volatility is favorable for sharp moves in either direction, so we're going to respect overnight risk right now. JP Morgan and travelers in the finance sector had big upsides. Lots of big breakouts in the indexes for the ETFs, including Japan, US mid caps, healthcare, handful of squeezes, and plenty of auto framers available. Dominated by summer and spring once more. And the NDX. Oh, sorry about that. Shows just how widespread the gains were today. The rebound was really extraordinary. So when you get a lot of green early, you like to see the ones that had duration this way. What's been outperforming all the way? Finance, industrials, mid caps, healthcare, good stuff all the way around. Marijuana remains at the top of the stack for tradability and trade value. And everything's looking normal and good. And the regression line Z scores are all looking favorable. If a little stretched, yeah. But the RL10 held support levels here. So if this reverses up, that will continue to boost the 30, which will boost the 90. So we're getting really close to the next leg up. Looking pretty good. All right, that's everything for today. We'll get this published, posted, and see you tomorrow.